Hi and welcome to the Market Alert for Monday, the 1st of November 2021. So S&P tops 4,600 in fitting end to best month of 2021. The melt up just won't stop. No, it won't, not until they want it to stop. The ECB loses control of the front end as inflation comes in scorching hot, while the ECB still refusing to concede that it is behind the curve on inflation. The market has already made up its mind and is pricing in higher rates for the end of 2022. So that's a year from now, really. So yeah, we know the inflation's there. It's just going to get worse. It is chaotic. Manufacturers place blame for record rising prices on Biden administration. It's beginning to feel we are headed towards a slowdown in a few months with inflation kicking in. Yeah, we haven't really seen it kicking yet. It's starting to. And once the momentum gets behind it, then it's going to be incredibly difficult financially for a lot of people. Today we've got two holidays. We've got the French holiday and the Italian holiday as well. And on wherever we are, that's today as well. 2 p.m. we've got the ISM manufacturing. Sorry, I was distracted then by a thought, which while I'm thinking about it, let me just do it. And that is we need to adjust the clock today. We went back an hour on Friday, so we need to adjust the times for the Dow and the DAX for the afternoon as well. So make sure that you adjust the hours by 1 hour. This is not set up in the Dow. Let me just pick up the Dow 2 minutes and then look at the primary time. It would be 14:30, 2:30 to 16:30. Just adjust this by an hour, and the same for the afternoon session of the DAX. Doesn't matter so much about the morning, but certainly the afternoon. Otherwise, you'll be out of sync. So the DAX. Let's just bring that one up. I think I always struggle with this. It's bizarre, isn't it? It's only just by an hour, but the afternoon session for the DAX is going to be 1:30 as of today. I think they actually put their clocks back a week, this next weekend, early hours of Sunday morning. So just a reminder there to do this. Right, let's go back to the Dow. Let's just get rid of this and the daily chart. So you can see that on Friday we had some selling pressure coming into the market, or supply, whatever you want to call it. There you can see the range of the bar is less than the previous bar and the volume is greater. And to keep that momentum up going into November, they gapped the market up overnight, but it hasn't held, with prices coming back below the all-time high that was made last week at 35,893. So we do have a new all-time high being made on the overnight, albeit a modest one there. Let me just mark this one up for you and get rid of this one. Let me just drag this out of the way. So there you can see the new all-time high is nearly 36,000. That's what they're gunning for. Very important number there. So don't discount that actually being reversed and moved back up. But 36,000, keep an eye on that. The market is trading to 89% on Friday as well. So the only way you can jump above all-time highs, get above all-time highs or resistance, there are only two ways to do it. You either jump above it, jump over the wall, or you hit it very hard and drive through it. So that's what we're seeing there. Friday, you can see the market moving higher after the open, pulling back a bit and then finishing higher again. You can see there Friday's high, market coming back to the close at the moment. So there's your gap. The gap has been filled, so the market now could find support and move up to that 36,000, which just happens to be there, that new the BRN that's there. So not that far off there, but at the moment now we're 150 points off as we come down to the BRN here of 3850. So but 150 points in the Dow is neither here nor there. In the DAX, pick up the daily chart. This also gapping higher. This is at 78 and 89% drawn from here. as you can see there, and from here. So we've got one coming back up to there, which is 89% where the market's gapped higher, and then 78% from there to there back. We didn't get to the 89, but again you can see the market jumping above the 89 and the 78 there, but at the moment showing weakness and coming back through. Although finding a bit of support at Friday's high, which I was quite expecting the Dow to do. Not a lot to report in volume at the moment. We're half an hour away from the futures market kicking in, but on the 30-minute chart we can see we're coming off the high of Friday there. Trades for Friday, the volatility picked up a bit. We had a bit of a sell-off to the BRN here, and then we saw them buy back. This was enough to move the market back up to the DP level. The market stopping here on very high volume, and then once prices traded back below the close and the 5-bar moving average, then the 20-bar moving average, they continue to move back down to the BRN where the selling had taken place here before, but this then became support, as we can see some demand coming in there with the volume being greater than the previous bar at the BRN. The market moved back to the 200 MA and then back through the 20 bar, giving another sell signal back down to around 78-89%. So from here to here, measured back to here. Let me just draw this in for you. You'll see the market stopping at the 78.89 level. And not only that, so you can see there 78% as the market stops. You can see the profit taking coming in by the shorts. Let me just remove this and then show you this, where you've gone from here back down to here. You've got 89, or double bottom, I would say more so there. Yeah, double bottom, where the market once again finds support. You see the demand coming in, they hold the market, they then bring it back 62%, and then we get into a morning of sideways until we have a shakeout here. Again, you can see the demand coming into the market at this point. The selling disappears, starts to drop off, the free then to bring the market back 100 points during the morning session. The afternoon, nothing happened really. It was just in a sideways move. You can see the 89%, 78 retracements. We get a full one back here. Look at the volume here. Sticks out like a sore thumb. And we then see further the buying and the shorts getting out there, and then the market free to move back to the upside there, coming back not a great deal, just over 80 points there, which is still obviously acceptable at its peak from its low to its high, and then the market just again continuing to move to the upside there. Overnight, so you can see the gap there in the 2-minute chart, blatant. The market attempted to fill the gap there, but didn't quite fill it, coming back to Friday's high. But has since done that as we roll forward. They've just managed to complete this, and coming off the high of Friday there. Meanwhile, in the metals, we didn't get the big sell-off in silver on Friday, but don't worry about that. That can still happen. If we look at the detail of Friday, you'll see that it was incredibly choppy in the silver market from the 130 Crimex Open. And I was amazed this held, and I'll show you why I'm amazed. Because that move back up in the US dollar, if they were going to ever sell off silver, they had the ideal opportunity to do that, and they haven't done it. That doesn't mean to say that they won't, but it was handed on a plate, wasn't it? You know, the fact that the US dollar moved up so sharply, and yet silver managed to hold as of Friday. It's not looking good overnight at the moment, and we're not taking out the previous day's high either. In the daily chart, we're making lower highs, and that's always of a concern. It's continuing to creep down. Unless you're taking out the previous day's highs or the previous highs to the left, then this is still looking as though it's part of a retracement, and there are the first levels for this retracement, in particular the 20 and the 50 bar moving average, to go along with this as well. So still looking as if it could be hit. Gold also looking very weakish. Gold weaker than silver on Friday. gold-silver ratio there, you can see that silver started to come back a bit on Friday because it held its level far greater than, was supported more than gold, which saw more selling coming into it compared to the narrow range that was in silver, which again still surprised by. There's the move in the US dollar in the 30-minute chart on Friday. They just ramped the market up. I think Yellen was out speaking, wasn't she, on Friday, and that was the reason. Every time one of the Fed members speak, it pumps the dollar. That's the idea. Allows them to do it, saying it's good for the dollar. There's a 30-minute look at silver. You can see how sideways it was, managing to come back up. But at the moment, it's showing some weakness. It attempted to move up earlier and has been hit, which you can see there with some selling, bringing it back down. So I'm not convinced of any further up move at the moment in the price of silver, as they're managing to move the dollar to the upside. And that's about it, really, where we are. Don't forget, we have got a couple of European countries on holds, Italy and France, for today. But we'll see how the market moves back to the upside, in particularly that of the Dow, which at the moment is finding a bit of support at Friday's high there. Okay, that's it. As ever, thanks for watching. See you in the next one.